So apologies for that, but we've got a gist of what you said, and it's good that you ended on a strong note saying that there's no slowdown in demand. Have a great year. If we don't see you again, greetings of the season to you and your entire team at Brigade. But let's now cut across to the RBI Governor Shaktikanta at the Business Standard BFSI Insight Summit. Let's listen in.
Because I am not often, but I am sometimes reminded by people that, I am supposed to have done history. So.
Yeah, but your work and policy work speak for you, not your.
But on a more serious note, let's get going. Yeah.
Okay. So let's spoke about this cryptocurrency. I remember in November last year, we had a fireside chat with you. That was in your room in Reserve Bank of India, 18th floor. It was telecast and webcast and all. And there, very strongly, you waged a war, if I may say so, against cryptocurrency 13 months back. So you have won the battle, you think? Because finance ministry has all along been, till recently, ambivalent. So the cryptocurrency war is over? You think you're a winner?
No, there is no war or anything like that. You see, we firmly believed and do firmly believe even now that cryptocurrencies have absolutely no underlying, and we have been sort of, I think a lot of noise is coming from. So, cryptocurrencies have certain huge inherent risks for our macroeconomic and financial stability. And we have been pointing it out. And the developments over the last 1 year, including the latest episode of the built around this FTX, I think after all this, I don't think we need to say anything more about our stand. I think the time has proved that cryptocurrencies are worth what they are today. And according to some estimates, the total value of cryptocurrencies was about 188 billion or 190 billion, 180 billion, but now the valuation, has come down to about dollars, has come down to about $140 billion or so. About 40 billion value has got really wiped out. But change in value in any so-called product is a function of the market. But unlike any other asset or unlike any other product, our main concern about crypto is that it doesn't have any underlying whatsoever.
Sure.
I think the term cryptocurrency, private cryptocurrency, is a fashionable way of describing what is otherwise 100% speculative activity. And there is a talk that, it should be regulated. Now, how it is to be regulated, somebody needs to explain. But I would like to just mention 3 points. One, the origin, the cryptocurrencies, the private cryptocurrencies owe their origin to bypass the system, to break the system. They don't believe in the central bank currency. They don't believe in the regulated financial world. They want to bypass and beat the system. The second thing is that they have absolutely no underlying. And not only that, I am yet to hear any credible argument about what public good or what public purpose it serves. There is still no clarity about it. And third, as I have said, it's 100% speculative activity. And I would still hold the view that it should be prohibited. I mean, countries have been taking different views, but our view is that it should be prohibited, because if it is allowed to grow, that if you try to regulate it and allow it to grow, please mark my words, the next financial crisis will come from private cryptocurrencies.
Okay. You are reiterating what you said. So, sir, we have a series of, I have a series of questions. I don't want to get into only GDP and inflation. So, little different thing, you launched CBDC, pilot projects launch. But can you just very briefly explain to us, I mean, how do we, what's the use of CBDC? Because you said it's currency, it's like currency notes, it's anonymous, and that's it. But what is there? I'm happy using UPI and all. Why do I shift to CBDC? It's just an optic to fight crypto, or there is something meaningful for me, people here, to use CBDC for the retail.
No, I'll explain why. I think in the monetary policy press conference, in the post-monetary policy statement press conference, I did explain about the difference between UPI and...
anonymous, you said.
Sorry?
This is anonymous,
you know,
like cash.
between UPI and CBDC. The first thing is UPI is a payment system. CBDC is a currency itself. That is number one. Number two, as I explained, UPI involves the intermediation of banks. You use through the mobile, you pay somebody, then my money gets debited from, the message goes to the bank, my account gets debited, the bank transfers the money to the bank of the, to your bank account. Your bank account sends a message to you that, so much money has been received. So there is an intermediation of bank. CBDC is like currency notes. You go to the bank, you draw it, you keep it in your purse, and you spend it. And what is more about CBDC is that there is an automatic sweep in and sweep out facility. 24 hours, you can draw CBDC, and if you are carrying excess CBDC, you can put it back into your bank account. So there is an automatic sweep in and sweep out facility. The second or third, whatever point that may be, the third is that the huge logistics, the cost of printing around printed notes, that is not there. Manufacturing paper, getting the ink, having a printing press, all that thing will become outdated over a period of time. Logistics wise, CBDC will be much simpler, and it will be much faster. Next point is for international transactions. When two countries have their own CBDCs, it can be instant, remittance, instant money transfer between one country to another country. The whole world is going towards, is becoming more and more digital. Almost in every sphere today, you have digital activity happening. You will see in the coming decades. Now, many central banks are still in, experimental stage. They're still analyzing. Some central banks have started pilot projects. But you will see in days to come, more and more central banks will embrace digital currencies. And India has been in the forefront of the digital revolution in the current, in the current century. So therefore, we have to be in the forefront. It's not a question of fear of missing out, or it's not a question of offering competition to a private cryptocurrency. I think that is how the world is going to evolve. That is how the digital world is going to take shape in the days and years to come, and we have to be ready for that.
So it's a currency of the future.
It's a currency.
Sir, you said that you are a student of history, but let me take the liberty of asking you about economics, which you know better than many economists. So how decoupled is India from the rest of the world? Because that's also be the subject of our discussion with the economist, the last show of the thing. And in that context, if you can just very briefly, because I have many more questions to ask, I mean, how long US Federal Reserve will continue to be the big daddy? I mean, we want it or not, our eyes in on the FOMC meeting, your MPC, one or two members can dissent, but the collectively Reserve Bank of India and MPC is always, you use that Arjuna's eye, so that it's FOMC, what is FOMC doing, is it slowing down, etc. So is it, I mean, there is no escape from that?
No, you see, being the largest economy in the world, naturally what the US Fed does, it matters. It matters to everyone. And a large part of global trade is also dollar denominated. So therefore, what US Fed does is definitely important for everyone. But so far as our monetary policy making is concerned, so far as our other decisions are concerned, we are largely guided by our domestic inflation growth dynamics and several other international factors. Actions of US Fed are considered, are studied, but that's only one of the factors. It's not as if something the Fed does and we will have to sort of follow that line. And so therefore, we are primarily, and I have said it earlier also, our monetary policies are governed and driven primarily by our domestic growth inflation dynamics. actions of US Fed do impact our domestic situation because, like if, there's a tightening, let's say the dollar becomes stronger, naturally the price of our imported, we are a commodity importing country, naturally the price of our imports, the crude, petroleum crude and other imports will go up. But we are not, nobody is anybody's big daddy. In the current world, everybody has his own space. Okay. And I think the days of Big Daddy and all that thing is 19th century. It's no more the case, but yes, US is a major player. But let me say that primarily we are governed by our domestic, and I mean, when I say it, I really mean it.
Okay. Sir, you brought in the two words which I thought would avoid, inflation and growth. So tell me, I mean, 10 months in a row, Reserve Bank of India failed to contain inflation within the band, which is nothing new about, I mean, everybody knows, and it has, as we speak, it has gone within the band, etc. But historically, very often RBI's estimate of inflation is off the mark. Actual inflation is higher than RBI's estimate. So one could be we need to take a look at the composition of inflation, or other could be Reserve Bank of India needs to take a look at its assessment of inflation. Where are we?
No, we constantly keep on fine-tuning our models of inflation forecasting. But any forecast, whether it is of inflation or it is of growth, by any central bank, not just the Reserve Bank, is always conditional to so many factors. Now, if the conditions change, if the underlying conditions change or do not happen the way you had assumed, then naturally the numbers will be different. But the last few prints, I think our expectations both on inflation and growth, we are almost getting it to the second decimal, or the first decimal if not the second. So 6.3 was our estimate for the growth of the second quarter, and we got 6.3. The last inflation print, which came at 5.88, let's say 5.9, our expectation was about 20 or 30 basis points, I think, higher than that for the month of November. So sudden developments do take place. We keep on fine-tuning our model. What is important to see in the context of inflation forecasting is not whether you are getting that number right. It is essentially whether you are getting the direction of inflation right. And not only the direction, but also the force of the direction. Whether we are able to read correctly that the inflation is going to go up, is going to go up very fast or is going to go up very steadily. So it is the direction and the speed of the inflation movement while it is going down or while it is going up, or if there is volatility. So I think it is the direction and speed underlying the inflation and inflation momentum, which is important, not just getting that number right. Because monetary policy is based on the direction of inflation, the broad speed of inflation, rise or inflation decline. We don't go by that, the inflation will be 6.34 or 6.48, something like that.
So talking about growth, Governor, you seem to be pretty conservative. In fact, your latest assessment of growth, you paired it bit. World Bank's assessment is higher than that. I mean, why this sudden conservatism? Typically, I mean, you seem to be less bullish.
The World Bank, the latest projection, they are talking of 6.9% for the current year. We have given 6.8%. Yeah. Primarily, it is because of the global headwinds. Europe and other countries, large number of countries are facing, facing a very serious growth slowdown. 6 months ago, the talk of, or 5 months ago, the talk of a global recession was much more intense. Now the expectations built around recession have slightly moderated, but the fear of a recession in many parts of the world, or the fact of slowing growth is quite visible in large parts of the world. And they will definitely affect the external demand. And external demand do contribute a lot to our growth calculation and to our, let's say, to our export performance, etc. So it is primarily the international factors, the slowdown in growth all around, the tightening of financial conditions world over. All these factors, external factors, will have an impact on the domestic growth scenario. But the underlying economic activity in India continues to be strong. In fact, the last month's fast-moving indicators, we monitor about 70 fast-moving indicators, and most of them are in the green box. We have this marking of green, we have this marking of red, orange, yellow, green. Most of the boxes in those fast-moving indicators are in the green zone. That means they are all picking up. They're still growing. But external factors are important, and they will definitely cause some, dent on our economy. So we have considered those aspects, and therefore we have adopted this 6.8%.
Yeah, latest November bulletin, which was released yesterday, also spoke about what exactly you are saying. So let's get into from macro to micro, which all these gentlemen sitting here, representing a large part of Indian banking, both foreign, private, and public sector banks. They would love to hear your views. This kind of credit growth, what we are seeing year on year, is it sustainable? Do you think that this gentleman actually showing seeds of troubles ahead? Again, we'll get into a bad loan? Or you think that no Indian financial system now knows, the bankers knows risk management, underwriting, everything? Because anecdotally we hear in private bankers are saying, no, risk pricing is not exactly correct. Probably we are going overboard and all. Are you concerned about this? Or is it everything is fine?
You see, two aspects. Number one, the credit growth, 17.5%, that is the latest number as of December 2nd, which we have, I think, published, 17.5% credit growth. That reflects the underlying fundamentals of our economy. The credit growth in the previous 2 years were very, very modest. In the first year of COVID, the credit growth was just about 6% or so. The second year, it was slightly better. So on a low base, and that is the second point, the current 17.5% is on a low base of previous 2 years. There is a base effect which is also playing its role here. So it's on a low base, and second point, it is reflective of the underlying fundamentals of the economy, and it is also a reflection of the pent-up demand of the pent-up demand for credit of the last 2 years. So considering all these factors, I think the credit growth at the current point is certainly far, far away from what you call exuberance or something like that. It is definitely very, very steady. We are monitoring it very, very carefully. And while on this point, let me also mention, because this question comes up again and again in any public discourse, that deposits are not growing and credit is growing. So are we heading for an unsustainable situation? I do agree that deposits have to grow. They must grow to sustain credit growth in the long term, in the medium or in the long term. But certain facts also will have to be kept in mind. Just as the credit growth looks very high because of the low base of the previous year, the deposit growth also looks pretty low because of the base effect of the previous years. Because in the COVID period, the deposits were growing by about 10 or 11%. So this deposit growth that we see today, the latest is, I think, 9.9%. That is on a slightly higher base. And looking at the absolute amount, in fact, the December 2nd figures, that is the latest, I was looking at the numbers. From end November 2021 till 2nd December 2022, that is over a period of last 1 year, the credit growth in absolute numbers is rupees 19 lakh crores. The deposit growth is 17.4 lakh crores. Let's say 17.5 lakh crores. So it is not as if there is a big gap between the deposit growth and the credit growth. The base effect of both is making it look that much more divergent. So at the current moment, therefore, I would like to say that the credit growth is reflective of the underlying economic fundamentals and growth of the economy. Sorry for that longish answer.
It's so much homework you do. In fact, you have taken away my second question about deposit growth. Do you think that the banking system is pretty unfair to the saving community? Because you yourself spoke about negative interest rate. And for credit, for the loan rates, you have an external benchmark. For deposits, it's free. So what needs to be done if you want to attract savers to the bankers' fold?
I think all the leading bankers are here. Most of the banks have already started raising the deposit rates. And going forward, they will definitely take a commercial call. They do need deposits. The banks also have a considerable amount of surplus SLR holdings, which they have the option to dip in anytime they wish to. And just to give out some number, because we do monitor it in the Reserve Bank on a weekly basis, the weighted average lending rate, I'll just give one example and not bore you with too many numbers. The weighted average lending rate on fresh loans, the lending rates have gone up by about 117 basis points, 117 basis points. You see, I remember 117 because in my student days, there was a DTC bus which had the number 117. So last time when I read the number, that is how, I remember 117. Otherwise, it's very difficult to remember. So, because I visualized that particular DTC bus. So, the lending rates on new rupee loans have gone up by 117 basis points. The fresh deposits, both retail and bulk deposits, the weighted lending, the deposit rates have gone up by 150 basis points, 150. So therefore, deposit rates are picking up going forward. It's a function of the market. Both lending rates and the deposit rates are a function of the market and the Reserve Bank's, policy rate. So I think deposit rates are picking up, and they should, they may even go up a little bit more or further.
Thanks, Governor. You spoke about this 117 bus, but I was wondering that Mr. Dayal sitting here, Chief Communications Officer, CGM, Reserve Bank of India, he probably kept an invisible teleprompter for you, the way you are reeling out numbers. Dayal sir, no? Okay, you've not done that. So let's come to,
I'll share, I'll share my own experience. Yeah. The best thing to remember certain numbers is to relate something to your own personal experience. So that is the best way to remember even, like 117.
Governor, this is a little critical question. No, HSBC boss has not taught me this. Reserve Bank of India has two roles. One is the developmental role, meaning about the financial system, stability, etc. Other is supervision and all. But of late, in private, bankers says that you are becoming a bit of a micromanager. Like you are running the banking system, not the bankers themselves. Nobody will tell you, nobody will stand up and say, but the little, said RBI, बहुत कुछ भी करता है उसको बोलो. Anything we need to do, you have to tell them. Every question, minute question, they call it quote unquote micromanagement. Is there any validity in what they are saying?
I don't know. This is the first time I'm hearing that. I do interact with the, the MDs and CEOs of the banks. I have not got that sense. And apart from the official engagement, I do know a lot of people who work in the banking sector at various levels. And I know personally several people, and I do get a lot of feedback from them about various banks. You have your friends, relatives, or their children working in various banks, so you get a lot of feedback from them. I have not heard anything, but perhaps what you are referring to is the intense and deep supervision that we are doing. Over the last 3 or 4 years, we have really deepened our supervision. Ultimately, at the end of the day, you see, in United States, failure of banks happens, it's nothing unusual. There are cases of bank failures, it happens, everybody takes it. In India, failure of a bank is just not acceptable by the public or by anyone. And everybody looks at the RBI. So it is our responsibility as the regulator and as the supervisor of the banking system to ensure that the banking system is stable, the banking system is robust, and it is ready.
That is an interesting, extremely interesting chat, a very freewheeling chat, as they should be, with the RBI Governor, Tamal Bandyopadhyay, talking to the RBI Governor. Of course, I mean, from what is relevant is, of course, the crypto bit. Essentially, the governor taking a victory lap, saying, well, I told you so. He didn't say I told you so, but he did say, I mean, I think there is little room for interpretation where he stands. He said, we still think crypto should be banned. There is no underlying reason why crypto should exist. He said, well, if they're allowed to grow, the next crisis will come from private cryptos. That is something he said. And of course, I mean, there was a bit of stuff on CBDCs, which is central bank digital currencies, micromanagement of banks, of course. Another interesting question was whether public sector bank and the lending that they're doing eventually at some point in the future will create some sort of a crisis. And the governor saying, well, at this stage, he doesn't believe so. And the lending is pretty, it's showing the underlying demand for credit, which shows the growth in the economy, etc. So interesting chat. Our team is listening, continuing to listen to the conversation. We'll cut back in. For now, we are cutting out to report on markets, which are actually not doing very much. We're down 30 points, 18,357. Sonia, the governor also told us how to remember numbers.
No, but absolutely credit where it's due, right? I mean, I think for over 2 years now, he's had this long stance of how, and he's reiterated time and time again about how cryptocurrencies are a big danger for the financial system. And now he's only come, he said, mark my words, the next crisis could come from private cryptocurrencies. So we should take this seriously, considering that he got it right.
Absolutely, he got it right. And I think only well-deserved that he actually makes a mention of it and puts it out on the record. We'll take a very quick break here when we come back and we discuss more on markets on the other side. Stay with us.